Welcome to this week's episode of Zero to a Million, brought to you by Unstack. I'm your host, Zach Rego. Today I'm joined by Charlie Hipwood, President and CEO of MassVentures, a strategic venture capital team that fosters early stage deep tech that fuels the economic growth across the Commonwealth of Massachusetts. Charlie, thank you for joining me today.
Thank you. You nailed it. You got it down to a T.
I spent a lot of time researching. You guys do a really good job of presenting what kind of companies you're looking to invest in. So that's certainly helpful for companies that are putting together pitch decks and emails, and obviously keeps you guys really focused. So we'll dig into that. But before we do, would love to hear a little bit about your background and how you found your way into venture capital.
Yeah, I mean, we could spend hours on this because it wasn't exactly a direct path. So I'll try to give you the Cliff Notes version. I always knew I wanted to be an entrepreneur. Was very entrepreneurial as a kid, had my own lawn mowing business with 20 customers, sold that business when I went to college. I sold the customer list to one of my neighbors for $500.
Nice.
So that was my first big exit.
Yep.
And knew I wanted to be in entrepreneurship, but didn't know how to get there, right? And the other thing I kind of fell in love with along the way for some reason was economics. And so I was an econ major in college, and being from the Midwest, I didn't quite know what a career meant, right? Or a career path was. People in my neighborhood who were successful were doctors and lawyers, and I knew I didn't want to be those two things. So I had to really figure it out on my own, and kind of went to JP Morgan for 4 years after college and thought, this finance and investment stuff is really cool. How can I combine entrepreneurship and finance and investments? And so I went to business school. Long story short, I started my first company in 2003. So that was my first venture into entrepreneurship. It started as a real estate technology. It evolved into a real estate private equity firm. Lo and behold, we became the second most active acquirer of industrial real estate in the United States in only our second year. We had a really good investment return. That company went public as a REIT in 2011. And so I had my first big, entrepreneurial success. Plus I was matching it with investing, which all right, this is a pretty cool combo for me. Started a fintech company in 2011, raised some money led by General Catalyst and Founder Collective. That didn't go so well. It was kind of a, infield single, if you're going to give it a baseball reference, but sold that company, started a third company that I was just getting off the ground when the opportunity to join MassVentures presented itself. And so I just jumped to the other side to venture, so I could really work with a lot of entrepreneurs, as well as kind of put back on my investor hat, which I enjoy doing. I like the thrill of taking a risk, right?
Yeah.
And so it's been good. I've been at MassVentures for 4 years and took over running the organization about a year ago.
Awesome. I want to go back to the transition from tech to real estate, a REIT, a real estate investment trust, for those not familiar. How did that happen? I'm really interested. You started as a tech platform for realtors or real estate. When did that transition kind of happen throughout, and obviously led to a huge success, but there was a big pivot, I'm sure, somewhere in the middle?
Yeah, it was a pivot, but early on.
Okay.
So, my co-founder and I, a guy named Ben Butcher, who was really the founder, and I was more his first person to help him along this journey. But I was a co-founder, just a very junior co-founder, since it was my first venture. And we both saw the same problem, but from different sides of the real estate market. He was a lender. I was someone, prior to that, I was working at a company called Level 3 Communications. And I was asked by our CFO to figure out how to do a sale leaseback on 5 of our properties. And I couldn't get anyone to do a sale leaseback with us because we were a sub-investment grade credit. And so just thought, that's ridiculous. In finance, you should be able to price all risk. And Ben on the lending side saw the same thing. He's like, how come I can't give a loan to these companies? Right. There's a certain, price for that risk. And so we built a company to basically take on that challenge of, let's help everyone price that risk so that we can make the market more efficient. And then as we started telling that story, people said, well, instead of selling your technology, why don't you just take $50 million and invest it in buildings and lever it up 80%? And sure enough, we did that, and our first fund round tripped In 12 months, we invested our entire first fund and had like a 65% IRR, and we were off to the races. So the pivot was people basically saying, well, forget that. That's hard to run a tech business. Take $50 million and go buy 20 buildings in the next 12 months and see if you can't sell them. So
that's really interesting.
Listen to your customers. Listen to the fundraisers would be the lesson there, right? So we were out raising capital for the business, and people were saying, "No, don't do that. Do this, and I'll give you money." And we said, "Okay."
Yeah. If the technology works,
if enough investors and customers are telling you the same thing, you pivot quickly.
Yeah. I mean, if the technology works, right, there's a higher and faster return on buying real estate and selling it. So interesting. Where's this technology now? Because I could use it as I'm trying to find investment properties.
I'm sure it's still the underwriting platform at that company.
That's crazy. That's awesome. That's a really, really good story. So you make your way to MassVentures, and you're doing investments today. So you obviously got the economics background. You've got some investment in real estate. It sounds like those were somewhat risky investments that other banks weren't willing to take on. Obviously, venture capital, incredibly risky investments. In fact, the real estate was probably way less risky if you look back on it now.
It is.
What are you, when you're looking at a company today, like what size company are you looking at for investments, both from a stage that they're at, from a growth trajectory, employee count? I'm interested in a few of those kind of parameters you plug in.
Yeah, so we have 5 people on our investments team at MassVentures, and all of us have startup experience, right? So mine was primarily in a real estate private equity firm, but then also a fintech company. I've had 2 exits. One of my colleagues has been in kind of technology for a long time, has had 3 exits. A couple others have been in B2B software companies. And so we have a ton of operating experience. And so we look to make investments real early, seed stage, pre-seed, seed plus, in small teams that are often first-time founders, and founders that we can be helpful with their growth path, right? So we like to be very active investors, and I would say that in order for us to be active, it's got to be at the very early stage of the business. So when there's 2 or 3 founders, we're looking for a little bit of traction, whether that's customer traction, product traction, or other, in order to make an investment. We also often like to make sure that there's at least one other professional investor at the table, and it's not just a friends and family round plus MassVentures, because so often, the company raises a seed round, don't quite hit their milestones, not quite ready to raise a Series A. We need to do a Series Seed 2 or Seed 3. I did a Seed 4 last year. So you want to make sure there's an investor syndicate around the table that knows this is more than writing one check, right? So friends and family usually give you a little bit of money, but it's only one check typically. And so we like to make sure there's an investor group around the table that can support the company. But, we also have a focus on just Massachusetts-based companies, which is both good and bad. It's great that we can, dive deep locally and find the best companies to work with. It's great that I don't have to get on a plane and go to board meetings ever. Not that happens anymore anyway, but it was a great perk up until March of 2020. Of course, it means that we have to miss out on opportunities that are local, but not in Massachusetts or even national. So, but yeah, seed stage, we're primarily deep tech now as well.
Okay. I want to jump back to you talking about you want to be kind of an active investor and find founders that you can, first-time founders, which I think adds another layer of risk.
Yeah,
so,
a ton of risk. Yeah. We love risk.
Yeah. Buying the first house on the block. When you think about being an active investor, what does that mean? Is it a quarterly meeting? Is it a monthly meeting? Like, how hands-on do you become in your investments? And is that a one-to-one relationship, or is that all of the partners at MassVenture are now involved in the startup in some way in helping guide and mentor?
Those are great questions, and it's a little bit of a case-by-case basis, but for the most part, it's more of a one-on-one relationship or a portfolio company and 2 of us. We're a small team. We're spread pretty thin. We'll lean on each other for advice on our portfolio companies, but we typically don't both go head first into helping those companies on a regular basis. what does regular basis mean? Some companies, I would literally go sit in their office every Friday and we'd talk through sales strategy and customer success and what's working and what's not working. And I would literally help them put together their sales strategy, their deck for the next raise, whatever, right? So it's been that detailed where I was almost a part of the team.
Okay.
But mostly it's, kind of monthly update calls, quarterly board meetings is when we get most of our information from those companies. But then we try to be very active on a weekly basis with introductions to customers, introductions to partners, introductions to employees, for example. I think we can be really helpful there with kind of hiring strategy. So, kind of leveraging our network to help these companies that might not have the network that we do.
And you mentioned you got a heavy focus in deep tech. What exactly does that mean? And what are some of the verticals and really specific areas that you've been consistently investing in, and how has that changed throughout the years?
Yeah, so deep tech, we don't really have a great definition for. We don't like to make it too defined. We like it to be a little bit open-ended. But deep tech is kind of, really represents a substantial innovation from a, science or engineering perspective quite often, right? These are often companies led by PhD scientists and engineers with a substantial IP component to it. Something that's just an amazing innovation in science and engineering to get us as a society to the next level, right? And often you're going to see that in areas like AI, quantum computing, robotics, advanced materials, advanced manufacturing, space tech, things like that, right? So, but we're not limited to just those, because the great thing about deep tech is there are new industries or ways of solving problems created every single day by deep tech founders. Often they're coming out of the university system or the research centers, and they're going to be, building something that's going to be impactful for all of us in the next 5 or 10 years. And so we don't like to limit it to just sectors, because there's going to be a new sector next week that I'm going to learn about, and I'm going to say, yeah, that's deep tech. Let's look at it.
And was there a strategic choice to move into that because of the, MIT being right there and obviously having a great community of folks in that space, or biotech in Boston is booming, and there's a bunch of companies there that are putting out great talent. I'm interested to hear how you chose this space. It's the first time to come across it.
It's intentional. There's a couple of reasons. One, there are very few VCs that invest in seed stage deep tech. There's a huge capital gap. I don't have the 2020 numbers, but in 2019, excluding life science, which has its own VC industry, excluding life science, venture capitalists invested less than 0.5% of all VC dollars for seed stage deep tech in 2019. But there's a substantial amount of capital at the growth stage for deep tech. So the theory is most VCs don't invest in seed stage deep tech because, one, it's typically first-time founders. It's typically founders with a PhD in science and engineering with zero business experience at all. It's typically going to take, the perception is it's going to take time and money to get to a place where they can attract growth capital. Time and money are kryptonite to IRR. Yeah. Right? So we are not IRR driven. We run an evergreen fund. So we are long-term investors, and so we can play in that space. The other reason, so that's a huge reason, huge capital gap. We can kind of pick and choose the best opportunities for us, the ones that we think are going to be great companies, and it's at a non-competitive bid. In fact, we're often pulling in together huge syndicates to help these companies. And so we lean on a handful of other deep tech investors in the ecosystem to help get these companies off the ground at the seed stage. The other reason that we looked at it is, we're meant to invest in Massachusetts only. We excel at these deep tech problems in Massachusetts and have for 40, 50 years, right? You can look at the evolution of the entrepreneurial ecosystem in Massachusetts, and it was always solving deep tech problems for the most part. And deep tech companies have to be located here because of the talent base, the lab space, and things like that. You can't have a distributed team, so they have to be here. And so I do think it's the future of the Massachusetts economy is a lot of deep tech type innovation, and I just want to be at the front of that wave. So it's high risk, but really fun to work on game-changing problems that, could potentially be huge success stories. And, in our portfolio, one of those success stories would be Ginkgo Bioworks. They four founders who spun out of the labs at MIT. We invested early. I don't think any other Massachusetts VCs are investors in Ginkgo. I could be wrong. But their last round was, 18 months ago or so at a $4 billion
Wow.
post-money valuation. That was pre-pandemic. I got to think that they're worth a lot more than that now. We're not on the board anymore, so I have no insight, but that's the kind of company I want to back. They're in synthetic biology. Nobody knew how to qualify them when they came out of MIT. There was no synthetic biology industry. So
it's funny. I almost, you look back to your experience when you're building the REIT and your genesis for creating that product, and more importantly than pivoting into the company, there was a gap in capital allocation. And then you look at today and you've almost pinpointed another gap, and you're saying roughly the same thing, like, hey, we're willing to bet on this. I think this is probably a little bit riskier, but the rewards are probably significantly higher. But that's interesting to see some alignment there.
I think that's great observation, Zach. And I don't know if I ever put two and two together there, but my career even at JP Morgan was working in capital gaps as well. So I guess I've just been, kind of tuned to look at those opportunities more than others. Where are other investors not looking that I should be looking?
Yeah.
So it worked well for my real estate company. It worked well for us at JP Morgan with exotic derivatives, and it's working well for us at MassVentures.
See, look at that. I just found the title to your book. When you write it, I get a royalty on everyone sold.
Happy to. I need a ghostwriter, though. I'm a terrible writer.
Same. I'm not your guy for that. So that's really interesting. I think you covered a lot of what I wanted to dig into there. Prior to investing in deep tech, what was the focus? Was it any and all spaces? And now you've kind of really started to zero in.
Yeah, when I joined MassVentures, we would call ourselves generalists. We were kind of seed stage generalists, and I think, we ask all the time for entrepreneurs to focus, right? You got to focus or you're not going to be successful. You got to focus or you're not going to be successful. And so, I took that advice to heart when I had the opportunity to take over MassVentures and dictate our strategy. I said, you know what, we need to focus, and we're going to focus here on deep tech, and we might get it wrong, who knows, but I'm pretty confident we'll get it right. So that was intentional to focus, because it's really hard to give entrepreneurs that. We give that advice all the time, right? Stop chasing every nickel. Like, you got to focus on your ideal customer. You got to figure out how that customer base is repeatable sales and how your customer success is going to work. Same thing for us. I had to figure out how we could find the best investments in deep tech, how we could be visible in that ecosystem and be the go-to investor for deep tech founders.
So I imagine that's a tough transition, right? Like, let's go back to you mentioned you come in and you help with sales. You're on a weekly meeting, you're providing partnerships, you're helping them with their sales deck or their pitch to a client or their customer success. I imagine in finance and real estate and all your other previous experiences, you didn't have a lot of, deep tech or, bioengineering experience or whatever it may be, or even partners in the space. I'm sure those have accumulated over the years. What was that transition like for you guys to kind of acquire that knowledge, be able to sit down with these founders and one, I would have no idea what they're talking about, understand them, and then two, understand, how do we help them drive the go-to-market strategy or sales strategy from there? Yeah.
So, when we shifted our strategy last summer, I described to the team that we had 43 years of history, but we are a startup. We are a startup with 43 years of history. And one thing I always tell startup founders is, be self-aware, know what you don't know, and accumulate that knowledge. Be, intellectually curious and surround yourself with people who do know those things or that you can rely on when you need to ask questions about those things that you just don't know. Deep tech, I don't know anything about anything, right? It's going to be that way for the next 20 years because what we're investing in is new. It's just new to everyone for the most part. And so, I wanted to make sure I got on my team people who were intellectually curious and willing to learn on a daily basis. People who, frankly, you almost don't want experts in certain areas, because in deep tech, things are evolving so much. You don't want someone who's going to be looking at it from the status quo. You want somebody who's going to be looking at this with eyes wide open, right? Like, I think a good analogy is a lot of people can't envision a world where we have, autonomous air taxis. Well, people who invest in autonomous air taxi companies have wide open vision that this is going to happen.
Yeah.
And that's what you have to have in deep tech. You have to have this faith that the science and engineering is where it needs to be, or will be soon, to achieve what these people think they're going to achieve, and that society's going to need it, and it's going to be game changing as the next, kind of level. So we know that we don't know anything about anything when it comes to deep tech. But when it comes to doing due diligence on a company, we sure talk to a lot of people.
Okay.
We talk to, we talked to, just this last week, we were looking at a company and we had to talk to a theoretical physicist, and we had to talk to, someone who could actually dive into the actual physics behind this project to see if it was sustainable. And literally it's a company that, without getting into too much detail, is creating a different way to create energy. And that is not used today, and that most people in the energy industry think is impossible.
So that was going to be, one of my last questions. I've asked every investor we've talked to the same question. I think you've got an interesting one, because it's hard to do due diligence on these companies because it doesn't exist. There is no, company to look at and say, here's the number one competitor in this space, or, And
in fact, it's even harder because often you can see the companies that tried and failed.
Yeah, those are probably easier to find. So you're really investing in founder or founders and an idea that you believe in and have vetted that is somewhat feasible if executed perfectly, I assume. How do you audit the founders, and what do you look for in a group? I imagine if it's one person, it probably becomes really difficult to feel confident in it, but there's got to be something that you're looking for there as a team.
Yeah. So, I like to tell people we don't invest in early stage technology, which is what I just described. Yeah. What we invest is in early stage entrepreneurs. And so we are looking for a team. We're looking for a team that is passionate about what they're doing, right? You got to have passion to start on the startup journey, right? There's so many downs along the way that it's literally passion and positive attitude that pull you through those low points. So they got to be passionate about what they're doing, really willing to work 24/7, make sacrifices that they didn't think they could make in order to get this business successful. So passion. Looking for intellectual curiosity, right? So they have to be willing to take the advice of others or seek the advice of others in order to grow their business the way that we think they can grow their business. Because often you just don't have the perspective that everyone, you don't have enough perspective when you start a company. And so you need to be intellectually curious and constantly finding the best solutions for your problems. Which brings me to the next thing. They have to be great decision makers. And I want to try to understand their process for decision making, because often as a startup founder, you're making decisions with limited information. And you have limited time to make those decisions, right? Because time is one of your assets and it's dwindling every second, right? You raise a big round of money, you just got yourself $1.5 million and 18 months of runway. Those are your two assets. Right. And so you got to make decisions, quick decisions, but good decisions in order to maximize that asset of time. And, and then just kind of combine with that, just looking for work ethic, which I think is just a big part of, if you're passionate about something, you're going to have a good work ethic because it doesn't feel like work. It's a passion thing. And so those are the 4 key criteria. And you have to suss that out over time. I can't get that out of one meeting. I got to see how you work and think and act. And I got to talk to people you've worked with before. And I'm going to ask you questions like, probing questions on how you make decisions, right? Like, even if it's something that you did, why did you choose this thesis for your PhD dissertation, right? Like, what was the process for deciding this topic? I want to know that you actually went through a process. If the answer is, well, I had to pick something by May 1st and at 11:59 that night, I was flipping through a magazine and settled on X, right? Like, that's not a decision-making process. So that's what we're looking for. It's all about the team. It's all about, again, their vision too. I want it, and the passion will bring out the vision, right? Like, we're doing this company to create X, right? And that is going to have impact of Y. And so I want to buy into the vision. I want to have passion in the vision, right? And then if I have passion in the vision, then it's about doing a little bit of due diligence around, oh my God, how hard is it going to be for them to get there? And who are the competitors that are going to get in their way? How much money is this going to take? And then I'm always looking to see who the next round of investors is going to be, because the second we invest, we got to start thinking about, or even before I invest, okay, who's going to invest in the Series A? How much? What milestones are they going to want to see? Because then my job is, over the next 18 months, is to get them to that milestone. But along the way, help have those conversations with the next investors so they can be on that 18-month journey and invest when we're ready.
So this will be my last question before my last question. How long is the time frame from, identify an opportunity, meet the founders, to investment? I'm sure it varies wildly, but if you had to say, like, hey, this is a 4 to 6 month process, because how much we have to get to know the founders to trust them, how much due diligence we have to do by interviewing theological physicists or whatever you said that was. Like, I don't know any of theoretical. I've got 0 of those folks in my Rolodex, so I don't even know where you find them. But take me through a little bit of that process from an initial intro to actual investment.
Yeah, so I'll break it down 2 ways. The actual investment process, right, from the point of saying, hey, I think I want to dive into investment, is probably at least 2 to 3 months of due diligence, serious due diligence, where it's one of the only things you're working on. To get to that point of, I want to spend the next 2 to 3 months only digging into this company, can take years from an initial intro. It can be as short as 2 or 3 months, but it's often more like we're getting to know these companies over years. So
interesting.
We've made 2 investments this year. Our fiscal year runs July 1 to June 30. So in this fiscal year, we've made 2 new investments. One in a company called Kitapen that we probably knew for 2 years prior to making that investment. Another one called Concerto Bio, which one of my colleagues has known. He's been an advisor to them for years, like literally years, when they were still in academia. We made a 3rd investment last month in a company that I've probably known since they were in Mass Challenge, at least 1.5 years between the first time we met them and the investment. We're looking at 3 companies right now. The one I'm working closely on, I've known for probably 4 years.
Wow. So,
yep, I met him 4 years ago.
So how often, and I lied, I'm asking you another question before I ask you the last question. This is a common trend on these podcasts. How often are new companies like that pipeline? Does it ever dry up, or do you feel like you're constantly getting these intros and you just kind of know that over the course of the next year, you're going to accumulate enough to pick the 3?
And remember, we had a bit of a pivot towards our focus about in July, right? So we almost had to redo our pipeline. We had to see who in our pipeline was already deep tech and who we wanted to keep talking to. We had to get rid of some companies in our pipeline that we were interested in, but we said, look, and this was hard for some of my colleagues to digest. Like, hey, we're not going to do an investment in that company that you've been working on for 3 months, because there's no deep tech. And they're like, well, but part of our portfolio can be non-deep tech. And I said, no, we're all in on this deep tech thing, because that's what we're going to be known as investors. And it's worked, right? The messaging and the marketing we've done around deep tech, our funnel is enormous right now. And the challenge there is really whittling it down. We always have a huge pipeline of opportunities, way more than we have money to invest, unfortunately. And, so we're always looking for ways that, we're an evergreen investor, so we rely on good investments to fund future investments. So we're always looking for ways to get exit out of some companies or figure out ways to raise some additional capital so that we can make more investments. But, it's a process just like any other. It's a funnel. I will say that, one thing that is a very simple thing that entrepreneurs can do to stand out, at least in my funnel, that a lot of successful fundraisers do is they send a monthly investor note, right? And that's to people who aren't necessarily investors, but they're looking at investing and who you think will be a good investor for you.
Right.
Just an update, bring them on the journey. I just had a call this morning with somebody and I said, look, we probably get 600 new companies in our portfolio every year. We're only going to invest in 3 or 4. And I bet of those 600, less than 20 were on their monthly investor update.
Wow.
Yeah. And it's a very simple thing you can do. And it allows me to go on the journey with you rather than I meet you within this year. 2 years later, you come and tell me what you've accomplished. A year later, You're telling me you're going to close your round in a month. Like, I'm not on the journey with you. I'm not going to invest.
Yeah, and I'm sure the time to investment is much shorter, mostly because you've been digesting the ups and downs over the course of X number of months to see what's going on.
It's so easy to write the investment memo when you've been along on the journey.
Yeah. All right, last question for real. And it can be deep tech specific if you've got any, but 2 books you recommend every founder reads: fiction, nonfiction, anything that's kind of been something that's driven you or helped you better identify opportunities or investments.
Yeah, and I'll come back to this whole concept of being intellectually curious. Founders should be reading constantly. I read, pre-pandemic, I would read about 40 books a year.
Wow.
During the pandemic, unfortunately, that has tailed off. But 2 books I would say that I read just before the pandemic that I thought were really good for entrepreneurs. One is called The $1 Trillion Coach. It's about a guy named Bill Campbell. He was basically an advisor and mentor to a who's who of successful technology entrepreneurs. We're talking Steve Jobs. We're talking the guys at Google. And the reason why I think that book is good is it just shows founders that even the most successful entrepreneurs are self-aware and know what they don't know and seek out advisors, right? And it's a book that's a compilation of stories from about 80 successful entrepreneurs and investors. So it's just a really good look into the world of entrepreneurship and being aware that it's okay to have a mentor that you can call at 11 o'clock at night on a Friday and just be like, I don't know if I'm cut out to do this, or I think I'm in way over my head. It's okay.
Yeah.
And so that's $1 Trillion Coach. I really liked Ben Horowitz's book, The Hard Thing About Hard Things. Thought it was excellent. I think his advice on how to think about hiring is second to none. And I think hiring is one thing that startups get wrong all the time. And you have to have a process around how you hire, because you will spend way too much time hiring the wrong people who won't get your business to the next level, and then you'll have to fire them and hire more people. And I see the hiring hamster wheel is something that startup CEOs get stuck on, and then they don't focus on their business. So have a plan. He outlines his plan in there. I use it myself. It's a fantastic book, especially for hiring.
Yeah, it's a great book. It actually was on my recommendation list, but that is a specific portion of his book, I think, that is super tactical and less, stories from his experiences, which I think he's got some great stories from his experiences as well.
He's got great stories too, because he talks about how his company was like a day away from being bankrupt and out of business, and like a week later he took it public. It's like,
yeah.
That's magic.
Yeah, the decision, you talk about like fast decision making and what's your decision making process. I think he does provides a lot of insights into how he made decisions, both on the hiring front, but even throughout kind of that portion of like who are we and what do we have that's valuable and how do we leverage that to keep the business afloat was really interesting to dig into.
I'll admit I didn't get any of the rap references.
I know. I thought it was bizarre. What's funny is I listened to it on an audiobook while I was driving from Boston down to North Carolina, which is where I live now. And it was interesting to listen to it because he actually recorded, which not a lot of authors like himself would do, but he actually recorded him reading the book. Which was good. But Charlie, this was a lot of fun. Thank you for joining us. A lot of great insights. If people do want to connect with you, where can they find you? What's the best way to get in touch?
Yeah, our website, mass-ventures.com, has all our contact details. We're very open to connecting with people, so happy to do that. I'm on LinkedIn as well.
Awesome.
So.
Charlie.
And my contact information's there too.
Charlie Hipwood, CEO and president of MassVentures. Thank you so much for joining me, Charlie. This was a lot of fun.
Thanks, Zach. Loved
Have
it.
a good one.